The second part, we will focus on the importance of cash. Why is it important for business to have cash with them? Okay, so number one, claims against the business have to be settled in cash. Okay, when we operate our business, we have a lot of expenses like wages expenses, rental expenses, insurance expenses, and all these expenses, right? You need to settle it with cash. If you fail to pay them, okay, they will actually stop all the services that they provide to you. Okay, so the next one, cash is needed to operate a business. Okay, for example, when you buy inventory from your suppliers, okay, you need to pay them in cash. Okay, if your suppliers know that you don't have enough money, or your suppliers know that your business can't generate enough cash, they wouldn't supply you any inventory at all. Next, cash is needed to take advantage of new business opportunities. For example, if my company, okay, would like to expand their business overseas, I need to incur more expenses. For example, I need to buy more non-current assets for my expansion, and all these expansion expenses and investment in new current assets, I need to use up a lot of money. So cash is very important when you want to expand your business. Okay. Lastly, business might also go bankrupt when they cannot find enough cash to pay their debts. So for some business, right, they are not doing very well, they cannot generate enough cash. If they cannot generate enough cash, right, they might fail to pay their debts, and this company might go bankrupt as well. Now we are going to talk about the purpose of statement of cash flow. So the first purpose of statement of cash flow is to assess the ability of a company to generate net cash inflows from the sale of the product and or providing of the business. So basically, you are looking at whether the company is able to generate cash from the basics operations of the business. Okay. So it also shows the ability to continue trading, okay, in the market as well. Okay. Next is also check the accuracy of past predictions of the cash generating ability of a company. Some companies have cash budget, okay, where they estimate how much of money they can receive in a particular period. Okay, so with the cash budget, okay, they can compare with the actual figures, which they can get it from the statement of cash flow, and to see how accurate are they in predicting the cash generating ability of a company. You can also compare this year's statement of cash flow with past performance to see whether there is any improvement in the management of cash flow. It also helps users of the financial statements, okay, to compare the cash generating ability of different companies. For example, let's say I'm a potential investor of company A, okay. I was looking at company's A cash flow statements. At the same time, I was comparing it with companies B and company C cash flow statement as well, just to see which of these company generate the most cash. Okay. I can also use the statement of cash flow to assess the ability of a company to pay its debts and to assess the ability of the company to generate cash flow in the future as well. Okay, so we are looking at their future liquidity. That means their future ability to pay their debts as they fall due.